So, welcome to the lounge, the end of the evening. So, I'll be your entertainer for tonight. Yeah. So, I've been in the blockchain space for about a year now. I was brought into it because of a little tangle I had about 20 years ago at a company called I2 that was mostly built on customer financing. It wasn't built on we had an IPO and quite a successful run back in the day, building business to business marketplaces to try to achieve something that I don't even know if we had the capability to do it, no matter how much innovation we tried to apply to that problem. And I think that might have changed today, now that some of these new capabilities are available for us to collaborate in a new way. And so, a lot of times people are seeking their fortunes. And so whenever I get a Chinese dinner or something like that, I always pull out the fortune. I say, whatever it says, it's on the blockchain, right? So, you'll have great success on the blockchain, or if you're courageous on the blockchain, So that's just kind of my little thing. But there's a lot at stake here. Obviously, we know supply chains encompass about 2/3 of the world's economy. So we're talking about huge amounts of value flowing through the world's economy, and it's really untapped to date. So if we only think of blockchain as a shared ledger or some way to share information, I think we're missing a lot of the potential that's available here. And so, you really can't do that without thinking about crypto economics and how they could make a huge change in this space. And that's really where we're oriented, is trying to bring those financial layers underneath the rest of the problem. So I'm currently with the Alliances ecosystems group of Sweetbridge. And we're like a lot of companies in this space. They're finding that they need to organize in a different way than your standard corporations that are out there. So we have a nonprofit foundation that handles the protocol development, the management of our currencies, and governance of that. And so that's going to become more and more of a decentralized, distributed organization over time. There's financial entities in several countries that handle the management of funds and how they flow back and forth to the regular economy. And we have ecosystems, and our goal in ecosystems is to commercialize the use of those, for profit for companies to help people engage with these and their businesses. So that's why we're here. Anything we can do to bring transparency to supply chains, enable distributed marketplaces, or deep marketplaces we call them, and foster frictionless global trade. So we're starting to see this evolution take place, where we move from the old ERP, MRP days into cloud-based hubs that were usually owned by a vendor that would manage all that data for you, into something where we have networks of networks, where we have very decentralized distributed value chains that are formed dynamically. They compete dynamically, and the ones who win in this next chapter of supply chains, I think, will master that new discipline. And here's kind of how we see that happening. Over time, we're still very early days in this process. As we move from data or silo-oriented systems into the cloud-based systems, into a future where all of these protocols enable us to kind of combine this functionality in a new way. And just to put it in perspective, I think somebody said the current value of cryptocurrencies is about 480 billion, I think, right now. And that's still less than 1% or less than 0.5% of the global financial instruments that are currently in operation. So, if you can see the effect of starting to put just a few assets of the channel masters that are out there, your large companies, your Cisco's, GSK's, your oil companies, like the velocity of cryptocurrency is going to increase exponentially as soon as that starts happening. Because right now, all we're dealing with is a few speculators dealing in, Bitcoin or using it as sort of a financial stand-in. They're not dealing with supply chain type functions right now. So it's going to bring an immense amount of value into the market very quickly as soon as it starts becoming relevant. So, we have kind of a list of criteria that we run through when we look at projects. In advancing Sweetbridge's own liquidity protocols and shared accounting systems, and then looking at other companies that are joining us in our alliance. Do they have a reason to use blockchain? And that's our main. Is there a crypto economic incentive for them to get involved? If it's not there, then they're basically just building a system somewhere else. For Sweetbridge's purposes, we look at supply chain problems as largely a liquidity problem, and that most suppliers all the way downstream to the roots of a supply chain have to often wait 60 to 120 days to get paid in most circumstances. In oil and gas, I think it's as high as 180 sometimes. Obviously, that's driving a lot of suppliers out of business, and it's making it very unprofitable for them to do business. So any way we can accelerate the liquidity back to those suppliers will enable them to deliver goods at a lower cost. And in the end, lower cost of goods sold, and it's a better outcome for all. And, macroeconomically, these are the kinds of effects we're seeing. So, you see that larger companies, they have more leverage and access. They have very low cost of capital. They often have a lot of capital on hand. So the money tends to pool into these large resources. Where at the roots of the supply chain, the cost of capital is very high, and they obviously have to wait a long time to get payments. So that makes it less efficient for the large companies, as well as the roots of the supply chain, where we really want to make sure we produce better outcomes for everyone. So one example of how we do this might be crypto factoring on an invoice. So using these economic protocols, you can basically, you deposit an invoice as a digitized asset, and you can borrow against it based on the, assessed risk of that asset in a cryptocurrency. So in this case, you would take out something called a UOU. You owe yourself. You choose your terms to pay yourself back. You take out Bridgecoin, exchange it for fiat currency, and when you're ready to pay it back, you put it back in. Invoice is settled. And there's a lot of companies that have a lot of cash on hand, and they're able to use this sort of to act as a crypto financier or self-finance a lot of their suppliers in a supply chain. So, if you're an Apple or a Cisco, large high-tech companies have a lot of this situation where they, they can have thousands of different suppliers at any given time. If they can offer very low interest capital and make the payments go through faster, it's going to create a huge impact on their cost of goods sold. Yeah, and here's some more about that. The goal is really just drive down DSO, use it as a, we think of supply chain as just a cash conversion machine. So how do I move as quickly as I can from the point of order to the point where I receive, payments? So in our philosophy, what we're doing right now, as an alliance group, we're looking at all of the projects that we see that make sense for us to work with. They usually have this idea of an asset-centric supply chain data model, which means we're not treating this from a infrastructure first point of view, or even a financial, the old financial central system that was managed more like a corporation would use for SAP or its financials. Instead, they're thinking of assets that all have identity in a distributed model, and how those can flow into a system to enable us to build new digital marketplaces that are very distributed, and to gain transparency into what's happening behind the scenes. So, that makes us into sort of a little bit of an incubator, a little bit of a consulting firm, and a little bit of a startup ourselves. How much time do I have left? Doing all right? Okay. A couple of sample ones. I know we're on ag tech right now, so we have a few really interesting projects. This one is a startup that we work with called Benkabi, and they eliminate the middleman basically for trade of rice between Vietnam and Africa. So they're able to reduce the cost of the cost that those farmers in Vietnam actually pay for seed. They could pay 25% interest just to order seed, and they get paid later. It could be 60 to 90 days. And the cost of cross-border payments is also very high. So, what happens if they're able to realize that trade using a barter and cryptocurrency system, they can get paid almost instantly. And, the cost of it gives you the reason, like, why would a bag of rice cost, $5.20 in Africa, and it costs less than $4 here? This answers that, and it gives them it benefits all in the end. We're working with some life sciences. A pretty interesting project is around actually analyzing the materials at the point of origin to see if there's something like conflict minerals that are within a given good, or if there's impurities. To be able to scope those out, you're basically getting a spectrometer reading of something. It's a lot like Star Trek. And so then when you have a finished good, at the end you can identify that those materials are there. It's not a QR code based or RFID type situation. It's basically analyzing materials and then reading them at the point of consumption. And this is another pretty cool one we're working with. It's basically parts provenance for aerospace and defense, because there could be anywhere from 3 to 5 million unique parts on any given aircraft, and a lot of the aircraft have a long aftermarket existence. It could be 30 years at a time. So, if you have a deep understanding of the identity of all of those assets and where they exist, if there's a problem, say with a given engine part, rather than having to down a whole fleet of planes, you can actually debug which exact parts sourced at which time were appearing in that particular plane, right? And then how can I predictively schedule repairs and have parts ready to fix the problems? So, these are the kind of scenarios that really attract us, and it's why we're here. So anyway, definitely look me up. I'm at BlueFug, and or just go to sweetbridge.com and find out some more about our economic protocols. But thank you.
We have a couple of minutes for questions. If anyone has a question, anyone in the room? Okay, we have one question. Someone, do you mind coming up and?
Thank you. I had a question about the spectrometer, and is it scalable and industrializable? It's off the bat, I would think it's quite expensive.
The unit cost is a little bit high right now for common industrial use. So, like a lot of projects, it's a matter of developing it and reusing it more over time. But it is, unit cost has to be brought down in order to be practical for anybody.
So at that level, it has a unique view, or microscopically has a unique view that you can tell what the material is from provenance?
Yeah, basically, if you can vaporize a small amount of any material, you can read, that uses a spectral analysis to see what elements are present in it. It's the same type of technology we use to read solar radiation or other things.
Thank you.
Thank you. Are there any other questions in the room? Okay, great. Well,
Appreciate it.
yeah, thank you so much. We're all good then. Jason, right? Mm-hmm. All right. Thank you, Jason. Appreciate you joining us today.
Yeah, thank you.
Awesome.